Medicare is charging some retirees hundreds of dollars more every month, and many people do not realize it until they open a letter from Social Security or notice that more money is disappearing from their benefit check. If you are 65 or older and enrolled in Medicare, there is one notice you should pay close attention to right now, because it could determine whether you are paying the correct premium or far more than necessary. What makes this especially important is that these higher costs are often based on income information that may no longer reflect your current situation. You could be retired today, living on a much smaller income, yet Medicare may still be using older tax records from years when you earned substantially more money. The result can be a surprise increase that affects your monthly budget and reduces the money available for groceries, utilities, housing, and other everyday expenses. Many seniors assume that Medicare premiums are the same forever. That is not always true. While most beneficiaries pay the standard Part B premium, some retirees are required to pay significantly more because of a rule called IRMAA. Most people hear that term only after receiving an unexpected notice, and that is where confusion often begins. IRMAA stands for Income-Related Monthly Adjustment. In simple terms, it is an extra charge added to your Medicare Part B premium and, in many cases, your Part D prescription drug coverage premium. The higher your reported income, the higher the surcharge can be. This is why that letter matters so much. It tells you whether Medicare has determined that your income places you into a higher premium category. For some retirees, the increase may be noticeable. For others, it can add hundreds of dollars every month. What surprises many people is that Medicare generally looks at tax information from 2 years earlier. That means your current financial reality may not match the income being used to calculate your premium. Imagine a retiree who earned a substantial salary in 2024, but retired in 2025. By 2026, their income may have dropped dramatically. Yet Medicare could still be using that earlier income information. The retiree may be paying a much higher premium even though their financial circumstances have completely changed. This is where many seniors unknowingly overpay. The first thing you should know is what notice to look for. If Medicare determines that you owe an IRMAA surcharge, Social Security typically sends a notice explaining the decision. The letter outlines the income information used and the premium amount you will be required to pay. Many people glance at the notice, assume the government calculation must be correct, and move on. That can be an expensive mistake. The information may be accurate, but it may also be based on outdated circumstances that no longer apply to you. That is why reviewing the notice carefully is so important. Start by checking the income year referenced in the letter. Then compare that information to your current financial situation. Ask yourself whether your income has changed significantly since that tax year. If the answer is yes, you may have options. One of the biggest misunderstandings surrounding Medicare premiums is the belief that higher charges are permanent. In some cases, they are not. Certain life-changing events may allow you to request a reduction in your IRMAA surcharge. Many retirees never pursue this because they do not realize the opportunity exists. Retirement is one of the most common examples. If you stopped working and your income dropped substantially, Medicare's original calculation may no longer reflect reality. A successful appeal could lower your premium and potentially save a significant amount of money over time. Another qualifying event involves the death of a spouse. Losing a spouse is already difficult enough. What many surviving spouses do not realize is that household income often changes dramatically afterward. If Medicare is still using prior income figures that reflected both spouses' earnings, the resulting premium may no longer be appropriate. This is something many beneficiaries overlook during an already stressful period. Divorce is another life event that can affect Medicare premium calculations. A divorce may change your financial picture in major ways. Income levels that once applied to a married household may no longer represent your current circumstances. If Medicare is relying on older joint tax information, you could be paying more than necessary. There are also situations involving a reduction or loss of income-producing property, a business slowdown, or other significant income declines. The key point is simple. If your income has fallen because of a qualifying life-changing event, do not automatically assume the premium shown in your notice is final. This is where an appeal may become important. Now, the word appeal often makes people nervous. Some imagine a complicated legal process. In reality, the process is generally focused on showing that your current income situation differs from the information Medicare used. The goal is to provide evidence that the income used in the calculation no longer reflects your actual financial circumstances. That is why documentation becomes extremely important. One of the first documents many retirees need is a copy of the tax return connected to the income determination. Reviewing the tax information helps confirm exactly what Medicare used when calculating the surcharge. You may also need Social Security notices and records showing the premium determination. In addition, documents proving your income change can be critical. For example, if you retired, retirement documentation may help demonstrate the change in earnings. If a spouse passed away, relevant records may be necessary to show the change in household income. If you experienced a divorce, legal documentation may support your request. The stronger and more organized your records are, the easier it becomes to explain why the previous income figure no longer applies. Many seniors delay gathering paperwork because they assume they can handle it later. Unfortunately, waiting too long can create additional problems. This is why reviewing any Medicare premium notice promptly is so important. The sooner you understand what Medicare is using and why, the sooner you can determine whether the amount appears reasonable. Let's talk about what these surcharges can mean in practical terms. Many retirees carefully budget their monthly income. They know approximately how much comes from Social Security, pensions, retirement, or other sources. They also know how much is needed for essential expenses. An unexpected increase in Medicare costs can throw that entire budget off balance. Imagine paying an additional amount every month that could otherwise go toward prescription medications, utility bills, food, or savings. Over the course of a year, those extra charges can add up. This is why overlooking an IRMAA notice can become expensive. Even retirees with substantial savings often prefer not to pay more than required. The issue is not simply whether you can afford the increase. The issue is whether the increase is accurate. That distinction matters. The purpose of reviewing the notice is not to avoid legitimate premium. It is to make sure you are not paying based on information that no longer applies to your situation. Another area that causes confusion involves timing. Some beneficiaries assume that because their income has already dropped, Medicare will automatically adjust future premiums. That is not always the case. In many situations, Medicare continues using the established income data until updated information is reviewed through the proper process. As a result, some retirees continue paying higher premiums longer than necessary, simply because they never requested a review. This is one reason financial professionals often encourage retirees to pay close attention to every Medicare and Social Security notice they receive. Important information is frequently buried in letters that look routine. Many people set them aside for later and never revisit them. That can be a costly oversight. There is another reason these notices deserve attention. Sometimes beneficiaries are so focused on Social Security benefit amounts that they overlook Medicare deductions entirely. When Medicare premiums are deducted from a Social Security check, the reduction may not immediately stand out. A retiree might notice that the payment seems lower than expected, but not understand exactly. Reviewing the notice can help identify whether a premium increase is responsible. If you have not looked closely at your recent Social Security and Medicare correspondence, now may be a good time to do so. Many seniors discover details they did not realize were affecting their monthly income. Let's discuss a simple review process that can help you determine whether further action may be necessary. First, locate any recent Medicare or Social Security notices related to premiums. Second, identify the income year being used for the determination. Third, compare that income information with your current financial situation. Fourth, ask whether a major life-changing event occurred after that income year. Did you retire? Did your spouse pass away? Did you divorce? Did your income decline significantly for another qualifying reason? Fifth, gather supporting records that document those changes. And sixth, determine whether an appeal or request for reconsideration may be appropriate based on your circumstances. Many retirees never get past the first step because they assume the government calculation must be correct. Sometimes it is correct, but sometimes it reflects an older financial picture that no longer exists. That difference can affect how much you pay every month. Another mistake many beneficiaries make is assuming that only very wealthy retirees are affected by IRMAA. While higher-income households are certainly more likely to encounter these surcharges, many people are surprised when a one-time financial event temporarily pushes income above a threshold. A large withdrawal, sale, or other income-related event can sometimes have consequences that show up later in Medicare premium calculations. That is why understanding how the system works is so valuable. When you understand why premiums increased, you are in a much better position to determine whether the increase is expected or whether additional review may be warranted. Knowledge can prevent costly misunderstandings. It can also help reduce unnecessary worry. Some retirees receive these notices and immediately fear that something has gone terribly wrong. In reality, the notice may simply be informing them that Medicare used a prior tax year with higher income. The important thing is understanding the reason behind the increase and determining whether current circumstances justify a review. That brings us back to the central message of this discussion. The letter matters. Many seniors focus on the premium amount and stop there. Instead, focus on how that amount was calculated. Look at the income year. Look at the income information. Look at whether your current situation is different. And look at whether a qualifying life-changing event occurred after that tax year. Those details can make a significant difference. Remember, retirement itself is often one of the most important triggers for a review because it frequently results in a major income reduction. The death of a spouse can also dramatically alter household finances. Divorce can change income levels and filing status. Loss of income from work or other qualifying circumstances may also be relevant. These situations are not rare. They affect thousands of Medicare beneficiaries every year. Yet many people never realize they may qualify for a premium adjustment. That is why reviewing your records carefully is worth the effort. A few minutes spent examining a notice could potentially save months or even years of unnecessary overpayments. And even if your premium turns out to be correct, you gain something valuable: confidence that you understand exactly why you are paying that amount. When it comes to retirement finances, clarity matters. Unexpected costs create stress. Understanding those costs helps you make informed decisions. Before you set aside your next Medicare or Social Security letter, take a closer look. Verify the income information. Review the premium determination. Consider whether your circumstances have changed. Gather any documents that may be relevant. And if a qualifying life event has reduced your income, explore whether a review or appeal may be appropriate. Many seniors miss this opportunity simply because they never knew it existed. You do not want to discover years later that you could have been paying less all along. The most important points are straightforward. Medicare Part B premiums can increase because of IRMAA surcharges. Those surcharges are often based on income information from 2 years earlier. Retirement, the death of a spouse, divorce, and other major income-reducing events may create opportunities to request a lower premium. Documentation matters, including tax records, Social Security notices, and proof of income changes. And perhaps most importantly, every Medicare premium notice deserves careful review, because outdated income information could result in higher costs than necessary. Take the time to check your notices, verify the income being used, review any major life changes, and make sure you are not paying more than required. Subscribe and share this with someone who may need this information.